Good morning is the last edition for the week on Business Morning. Thank you for joining us. I'm Chimeze Obi Iwagu, teeing off from the global oil market as prices extended losses to fall around 2% this morning after U.S. President Donald Trump tested positive for the coronavirus, while the U.S. stimulus package eluded negotiators amid ongoing worries about demand. Brent crude slipped on the news and was down 78 cents at $40.53 a barrel. U.S. oil was 79 cents, lower at $37.93. U.S. oil is heading for a drop of more than 5% this week, while Brent is on track to fall more than 4% in a second consecutive week of decline for both contracts. In a tweet, Trump said he and First Lady Melania Trump tested positive for COVID-19. Trump said earlier he had started a quarantine process after Hope Hicks, a top advisor, had returned a positive test. Oil was already in negative territory after a bipartisan deal for more economic relief in response to the pandemic continued to elude House Speaker Nancy Pelosi and the White House, adding to fears about worsening demand without more support for the economy. Crude supplies from the Organization of the Petroleum Exporting Countries in September rose by 160,000 barrels per day from a month earlier. The increase was mainly the result of more supplies from Libya and Iran. OPEC members that are exempt from an agreement to withhold production between OPEC and allies led by Russia, a group known as OPEC+. And a new report by the United States Conference on Trade and Development indicates that Nigeria is among countries whose exports are underreported by partner countries. In a report titled Tackling Illicit Financial Flows for Sustainable Development in Africa, the organization notes that the development has led to a large negative average trade gap of more than $1 billion annually for Nigeria and Ghana. According to the report, it is important to improve intra-African trade statistics in order to understand opportunities for regional trade integration. Findings showed that all major petroleum exporting countries, including Nigeria, to some extent had large negative export trade gaps, with the exception of Egypt, which has a large positive gap. It added that informal cross-border trade was sizable and important for many African economies. The report cited Nigeria and Benin as an example of trade partners with large volume of informal trade. And as part of the federal government's intent to stimulate the economy, President Muhammadu Buhari, in his live broadcast yesterday, took time to justify the rationale behind the petrol subsidy removal and reminded Nigerians of some steps that have been taken to mitigate poverty rate in the country. This part of the president's Independence Day speech remains a precursor for the economy and the financial markets, especially at a time when the country is dealing with a twin shock of falling crude oil price and the COVID-19 pandemic. Well, let's get a sense of how the investing public is reading the president's speech. Robert Omotunde, Chief Investment Officer at AfroInvest Asset Management, joins us now. Good morning, Robert. Thank you for joining us.
Good morning, Chimeze. It's my pleasure to be with you this morning.
Now, as an investment analyst, what's your take on the president's Independence Day speech? What part of that speech struck you the most?
Well, I think that the speech was somewhat appreciated. I say appreciated because what the president tried to do yesterday was to take Nigerians down the memory lane. So whether that inspired a lot of confidence in Nigerians, it's another thing to now discuss. But the president tried as much as possible to start from independence, when the British handed over power to Nigerians. And basically, again, from what the president tried to do, most Nigerians will say that they have not really enjoyed, the benefit of being an independent country. Because if you look at countries that we started together in terms of even countries who haven't even attained independence, as at the time we got, they are far. I mean, most of them are doing better than us, to be honest. And I think that the president did not try to hide some of the challenges that we are facing in terms of how the economy has been run over the years. When he was talking about how we went into military rule, and how we have come out of it, and for 21 years now, we're talking about being under a democratic dispensation. But that said, in terms of the economy, I think it is agreed by even the president that the country hasn't done so well. We haven't, managed an economy the way it should be managed, and for so many years we have, we have not the nail on the head. Look at what is just happening in 2020 when the COVID-19 pandemic, struck, and we are all beginning to see the effect globally. That is when the Nigerian government is now beginning to take the right steps that should have been taken. I mean, those steps predate this current government, to be honest, but this government also had an opportunity to have changed the narrative. Since 2015, that was not done. The last episode of recession that we suffered in 2016 gave a very unique opportunity for the government to have made a lot of changes, which they didn't do. But this time around, the government had no choice. I can tell you, if the government had, an option not to make some of these reforms that we're seeing now with increase in electricity tariff and petroleum prices, they would have done that. But now, even government's hands are tied and they can't do so much because the revenue fundamentals of government have suffered a lot. And for them to be able to get this economy out of these current woes, it will mean that some hardship may have to be, visited on Nigerians. Not the intention of government, but like I said, even the government's hands are tied. Because, for example, look at the petroleum subsidy that, prices are now changing in a period when people have lost jobs. Unfortunately, government cannot do much about that because, again, even though people have lost jobs, the fundamentals of that market with exchange rate movement that we have seen will necessitate that prices will have to fluctuate. The same for electricity tariff, which has been increased. And what you see is that for the Nigerian economy to grow, we need that electricity sector to be properly, harnessed. And for us to harness that sector properly, it means that we need to allow market reflective tariff. These are laudable reforms. It's just unfortunate that it's coming at a very wrong time. Like I said, government cannot do anything about it because their hands are tied at the moment. But I mean, we'll keep watching the space and seeing and that's why if you go to the streets and you hear the sentiment about the speech, most Nigerians feel there's no joy in the speech, even though the government is trying so hard to explain to Nigerians why some of these tough decisions need to be made.
And how compelling that president's speech around petrol subsidy removal is for the economy at this point. Specifically, he did mention there is no reason why petrol price in Nigeria should be lower than Saudi Arabia.
Yeah, again, it's part of my initial comment, which is that it is now that government just beginning to realize that. Remember, when we had Occupy Nigeria in 2011, in fact, in 2011, the level of awareness of most Nigerians about subsidy was not even that pronounced as we had it in 2015. By 2011, a lot of Nigerians still believe that, because we have so much corruption in the land, why should government remove subsidy? The only thing that the poor man enjoys. I mean, we've argued that the subsidy payment on petrol doesn't, benefit the poor per se, because Nigeria, as we know today, is the poverty capital of the world, which means that most Nigerians live below $1.20 per day. That's barely 600 naira. So what that means is that to be in the actual sense, someone who lives on 600 naira per day, how much of energy demand that does that person need, even in terms of electricity and petrol? So that argument has been made that in the long run, the rich benefit more from petroleum subsidy. But what I'm saying here is that as of 2015, that awareness, was beginning to change. Even some of us that participated, some people that participated at the, rally in 2011, they were blaming themselves by 2015 when we saw how much of wastages, was going into payment of subsidy. And as it is right now, it is the right thing to do for government, albeit the timing is wrong. But like I said, even the government cannot do anything about the timing. because for them to continue to subsidize Petro at this moment, it will mean that there will be no even monies to pay salaries anymore. Those are recurrent expenditure, let alone now investing in capital expenditure. So Nigerians must understand, and I hope that the Labour can support the government on this one. There are so many things that the government has gotten wrong, but I think the removal of subsidy, this is the best time to do it. In 2011, we were arguing that was the best time to remove the subsidy on petrol. Perhaps 2015 or 2016 was the second best time to have removed it. This is the third best time. If we don't do it this time around, we may never get out of this particular conundrum. So, I think that what we should be doing as a nation is to support the government, and perhaps we can ask for palliatives, in any way that the government can give palliatives. But definitely, it is not in the interest of this current generation, neither is it in the interest of the generations to come, for government to continue to subsidize consumption in petroleum subsidy or even in electricity tariff. And if we want more jobs to be created in those sectors, this is the time for the government to allow market principles to dictate how we allocate resources within that particular sector, and then we can create more jobs. And government has promised to create a lot of jobs, and I've argued that these are not jobs that government can create by just sending people to ministries. What's the capacity that government agencies can take in terms of employment? It is the private sector that will drive the level of employment that we're expecting to create in this country. And for us to do that, the market principles must be right. The other things to speak to as a country is, we've enjoyed 20 years of uninterrupted democracy. We should be advancing and be getting better. We should focus more on things like rule of law, because they affect businesses. A lot of businesses that want to come to your country to establish, they will check when they are scanning the environment, and they are checking, the political, the environment, the economic. One of the things they want to look at is there rule of law in the country where I'm coming to do business? Because businesses will always face challenges where they have to, go to court to adjudicate. If there is no rule of law, and court will make pronouncements that, is not obeyed, it means that even businesses cannot try. So when we talk about rule of law, it's beyond the benefit that we get in terms of constitutional democracy. It even affects businesses, and that is why the government must take it much more seriously at this time.
So how do you expect the markets to trade the president's speech today? Is the first trading day since after the independence holiday, and of course the first one for the month.
Well, I think that the markets would not necessarily, as a country, we haven't gotten to that point where president's speech, if you analyze a market like the US, if the president tweets, that tweet can send the market south or north. We haven't gotten to that level yet where our market is, directly tied to the polity, because a lot of market players know that there are so many things that we still need to fix in our polity. Maybe until then, what is the market can pick from the president's speech that the government is serious at this time about the removal of petroleum subsidy. And I hope that that will remain and government doesn't budge by the time a lot of pressure are coming from Labour. Now, that said, what we would then expect is that sectors like the downstream oil and gas are likely to benefit, because that's one of the factors that has impacted on the performance of that sector on the Nigerian Stock Exchange, for example. Now, on the fixed income market, what we would expect is that the market would see this news, as some form of relieved pressure on government revenue. Even though we already have a plan for the borrowing of government for the year, what the market would just expect is that the government will stick to that plan and will price it appropriately. Already, we are seeing that after the last MPC meeting, yields have been trending downwards, and we are still likely going to see that, because from demand and supply mix, there is really nothing to change that course for now. So to that extent, we would expect that investors are pricing yields in the fixed income market in relation to the expectation in terms of supply from either the DMO or the Central Bank of Nigeria. But in terms of the foreign exchange market, we haven't seen there's been no calm yet. We're still seeing parallel market going as high as 460. At the I&E window, is still contrived at about 385 to 390. But we would expect that at some point, if there is no sufficient supply to make the market liquid, we will still see a lot of pressure happen at the I&E FX window. On the foreign exchange market, we still have a bit of issues that we expect that in the coming weeks, the central bank will be able to address, and the economy will be able to move much more faster than we are going right now.
All right, so we heard the president reel out some of the economic reforms that the present administration is trying to put in place. How well do you think these reforms will shape the confidence of foreign investors in Nigeria? Because we know that latest data from the Nigerian Stock Exchange shows that total foreign transactions increased by about 12.69%. That was between July and August 2020. Does that signal some improved confidence in the Nigerian market for foreign portfolio investors?
Well, I think that on the part of government, like I said, it's never too late to start implementing those reforms. Our research division, for example, in 2018, when we're looking at the 2018 outlook, we issued a report then when we said reform or be relegated. In the actual sense, we have an economy, that is competing for funds from, all other economies within Africa, even other emerging and frontier markets. And one of the things, one of the dangers of not reforming your economy and making them attractive for foreign investors is that if you don't do it, foreign portfolio investors or even direct investors would fly over your country and go to the neighboring countries to invest. And that's one of the things that countries like, Ghana and Egypt, have enjoyed, in the time past. So it is never too late for some of those reforms to be put in place. And all I'm just going to say is to encourage the government to stay committed. A lot of people are losing, faith in government because they just feel that they are waiting for too long after 20 years of independence. 60 years of independence and 20 years of democracy. A lot of people are just, almost giving up and saying, can any good ever come out of the country? But I know the government can also be under pressure, from that perspective. But if they stay committed, to some of these reforms, even though the people may not understand what the government is trying to do, if the government is really sincere and is serious about these reforms, within, a matter of years, 2-3 years down the line, people will begin to see it and appreciate the government for it. Government should not be looking for people who wants to praise every policy, when they issue them out, But people sometimes will just wait and see how these, policies are being implemented to now see whether they are going to benefit the country on the long run. So my advice to government is to continue on the path of reform. If we do not reform, the country will become relegated. We're looking at foreign direct investment data, and you will see that, even before COVID struck, we started seeing a very significant drop. We've had a significant drop in FDI over the last almost 10 years, but FPI has not suffered that much of drop, until we saw this COVID-19. And if you look at COVID-19, one of the consequences is that we've seen, significant drop in, FPI data. Now, what that means is that for government to continue to engender confidence, it might take some time. Some of these reforms, you won't expect foreign, portfolio investors, for example, to look at your reforms and just come, directly to you. Sometimes they also study to see whether you are committed, whether you are serious to it. So there'll be a lag between when we begin to see the impact in terms of, increase in foreign portfolio inflow. But in terms of foreign direct investment, the reforms that we're already doing in the real sector, deregulation of the downstream oil and gas, implementation of cost-reflective tariff on electricity are very critical reforms that on the long run will then drive the interest of most investors to now start looking at Nigeria as an investment destination.
All right, thank you very much for your time, Robert. Robert Omotunde is the Chief Investment Officer at AfriInvest Assets management. We'll take a break, and when we come back, of course, we'll still dissect the president's speech, but this time looking at infrastructure. To stay with us. All right, Nigeria celebrated its 60 years of independence yesterday with firm commitment by the President Muhammadu Buhari to put the country among top 20 economies. The president noted the Nigeria's economic challenges, but maintains that as a responsible government, it must face realities and take tough decisions. His speech supports the removal of subsidy, which is expected to give a boost to infrastructure development. And so, as Nigeria clocks 60 after independence, which way forward for infrastructure development in Nigeria? I'm being joined by the chairman, MTN Nigeria, and the former director at the Center for Infrastructure, Policy, Regulation and Advancement at Lagos Business School, Dr. Enes Ndukwe. Thank you very much, Dr. Ndukwe, for joining us on the program. Good morning.
Good morning. Thank you very much. It's a big pleasure.
Right. So you listened to the president's democracy, or rather, Independence Day speech yesterday. What for you was key from what he said?
I think you mentioned something in your opening remarks, which was a statement about removal of subsidy. I think I will start by congratulating the president for the boldness and the courage to deal with that issue of subsidy removal. Because to tell you the truth, that has been a single most terrible thing about the country for many years, source of a lot of corruption, and as well as a drain on the finances that government should have applied to infrastructure development. So I like the idea that he spoke about it and actually compared Nigeria with other nations that are also oil producing, where such subsidies don't exist. So I think that's the major takeaway for me as far as the president's speech is concerned.
Now, talking about subsidy, I mean, we keep saying, oh, removal of subsidy, we've removed the subsidy. One thing is to remove the subsidy. Another question is, these monies, where would it be channeled to? Well, it is expected that these subsidies that have been removed should be channeled to development projects, such as infrastructure development. Now, for you, I mean, this is an area where you are an expert in. We're talking about power, we're talking about road, we're talking about railway, we're talking about technology. For you, what is key? What should they be doing with this subsidy removal? Because I think that should be the main question, and what perhaps even the labor that is fighting for this subsidy thing and all of that to ask, where are we channeling these monies to?
I think, like you said, one important area to channel the monies to is in the area of infrastructure development, both soft infrastructure and the hard infrastructure. As you know, we are lagging behind many countries as far as infrastructure development is concerned. The state of infrastructure in the environment leaves so much to be desired. Successive governments should have done more, especially during the oil boom days. And there are quite a number of areas of infrastructure that stand out for me. One is roads. We need to really put a lot of money to building roads infrastructure. Like a Chinese proverb said, if you want to prosper, first build roads. We don't have enough highways in the country today. We really need to devote a lot of resources to building our roads infrastructure. And the second area that I would like to see is in terms of power infrastructure, which is still at a level that also leaves so much to be desired. The third area is in the railways, which government is doing a bit about at the moment, but it had suffered a lot of neglect in the past. And what this has done is to transfer pressure from the railways to our roads. And that has led to even further deterioration of many of our important highways. So one would like to see a move towards putting a lot of money and investment into roads infrastructure. Of course, working side by side with the private sector, because at the stage we are today, I think private sector involvement is so critical to improving our infrastructure development generally.
All right, I want us to look at the issue of infrastructure financing. That has been, that's one of the challenge of fixing infrastructure. And then yesterday, when the Minister of Works and Housing, Babatunde Fashola, was speaking on our show, he talked about two choices: to borrow or to increase taxes. Which of these choices for you is most suitable for Nigeria at this point? We've heard so many people talk about mortgaging the future of our children. That is when you talk about borrowing. For you, what choice should Nigeria rather take at this point?
I think, first of all, taxation is an important component of government source of revenue. There is a limit to how much you can tax. So borrowing is an alternative, but there is also a limit to how much we can encourage government to borrow. So for me, it's a mixed bag. It's a mix of the two. We can't run away from looking for areas where taxes have to increase. I think the first thing is to remove what government has done now is to remove subsidy the way we were doing in the past. That will release a lot of money to the economy for financing infrastructure development. Take an example for roads, for instance. It might not be direct taxation, it might be indirect. For busy highways, there is no reason why we can't ensure that we have toll plazas on major highways that are busy. Because with that, you have enough money to ensure that the roads are well maintained. Quite honestly, if I'm given a choice between having subsidy on petroleum products, for instance, and having better and well-built roads, my choice will be to have better and well-built roads. I was reading something on WhatsApp the other day about a gentleman who was moaning about a journey that should have taken him 30 minutes, that he was on that journey for over 2.5 hours. And yet, eventually he had to turn back because the roads were particularly bad. So the truth is that if you have better roads, you actually save money on petroleum that you burn on your roads, and life is even of a better quality than we have today. So to answer your question, I'm not sure it's a question of either this or the other. I think it's something that we have to have a mixed bag and do whatever is necessary for each one. Government has to look at points where taxation might be necessary and other areas where borrowing might also be necessary. But at the end of the day, what matters is good governance processes, less corruption. When we borrow money, let the money be used for actually the reasons for which they are borrowed for. And then we should borrow for building infrastructure, not for paying salaries and things like that. So all those things are very important. Once we take the right decisions and do things the right way, I think we should be fine as a nation.
Now, what is your take on the China's Belt and Road Initiative as a way of financing infrastructure?
Quite honestly, there's been a lot of talk about that particular initiative. I must say that it's also part of borrowing. I'm not sure the money is free of charge. And when you have to borrow, you must also make sure that you borrow rightly. One thing that has occurred to me recently is whether the Chinese loans to developing countries should not be channeled through private companies that are in a better position to use that money judiciously and also be accountable for such monies. Because what has happened in many countries, I am not talking about Nigeria today, in many countries, some of these monies are borrowed. Labor is imported from China mostly. And at the end of the day, you're not too sure whether the country is benefiting maximally from such loans. So if it's free money, then that's not a problem. But if we are talking about really borrowing for which we have to pay back subsequently, then we must look at everything properly and make sure that we do the right things. And like this proposal I'm talking about, where some of such monies can actually be channeled through private sector companies that are able to account for those monies properly, of course, with government providing whatever guarantees that are required in terms of sovereign guarantees, and also monitor that such monies are used judiciously. Thank you very much.
All right, you talked about earlier, you talked about issue of public-private sector PPP initiative. And you know the private sector can only be attracted to invest in areas that are very commercially profitable, but not all the infrastructures are commercially attractive. Is this not a major limitation to PPP?
Quite honestly, it's true that mostly private sector funds are channeled towards where there is some return on investment. But there are ways around these things. And the ways around them include incentives. Private sector can be convinced to go to areas that are not particularly profitable when those areas are given out in combination with areas that are profitable. I don't know if you get the point I'm making. For instance, in the sector that I'm used to, in those early days of telecom development, it used to be said that if you're given license for a very profitable environment, government can actually include some other areas that are not so profitable and insist that those areas should be developed side by side. The same thing with roads infrastructure. If you give incentive or give a road concession to a major highway that is very profitable, you can actually add to it some side roads and some smaller highways that must be done with those roads at the same time, so that revenues that come from such profitable roads can also be channeled to build some other roads that are not that profitable. So policy guidelines and regulation come into play. And also, I think it's important to also say that when we do these things, government must always have in mind that it's a win-win situation. Once you see the private sector as a partner in progress, then you're able to take good decisions and look at private sector as a partner and make sure that you discuss with such partners about what you want done and make sure that they're included in the overall plan. But I think incentive is very important. I give another example. For instance, many states in the Federation today charge what is called right-of-way charges to private operating companies, especially in the ICT area. I was surprised when they charge the same thing for very rural communities where you have very low population densities and where recovery of infrastructure investment would be very, very low and slow. So when you have situations of that nature, governments should actually find a way of incentivizing service providers to go to those areas by removing some of those right-of-way charges, by reducing taxation for them in those areas so that they're encouraged to go there, so that even if they are making small money, at least they'll recover the investment, even if they don't make profit. But if there is so much barrier to investment, people will shy away from those areas. And what happens is that those communities lose out completely. So that's why I'm saying policy, regulation, incentives are so critical in making sure that we do these things right when we are looking at PPP situations.
All right, thank you very much for your time, Dr. Ernest Njukwe. He is the chairman, MTN Nigeria, and the former director at the Center for Infrastructure, Policy, Regulation and Advancement at Lagos Business School. Thank you very much for your time.
Thank you very much. It's a pleasure.
All right, we'll take a break now, and when we come back, we'll do a quick crossover to London, and back here we'll look at our market as the market resumes today after the Independence holiday. Just stay with us. Well, global markets are on track, are back foot this morning after U.S. President Donald Trump and First Lady Melania Trump both tested positive for COVID-19. Well, let's see how the London market is responding to that news. Let's bring in Juliana. Good morning, Juliana. Are the London markets also reacting to the news that the U.S. President Donald Trump has tested positive to COVID-19?
They are reacting. It's a huge story, not only across the world, but certainly here in Britain. And we, of course, know only too well, having our first head of state testing positive for COVID-19. In fact, we almost thought that Boris Johnson was going to die. So it's a huge story dominating all sentiment here. And it has been felt by the markets. The FTSE 100 fell sharply, down by about 0.7%. Of course, we're going to expect Wall Street to open lower. I believe that happens at about 2:30 local time. Of course, it is a hot button, isn't it? The health of the US president for all markets. But of course, it has had the opposite effect in Asia. Asian markets are doing pretty well after they heard this news. I suppose the big question, and a lot of investors are going to be asking, what exactly does this mean? Of course, we haven't had a real health scare like this before since 1981 when US President Ronald Reagan was shot. I do believe one of the Bush presidents also fell ill at a Japanese dinner party. But there is uncertainty. People are not sure what exactly is going to happen. We know that the election, which is actually scheduled 1 month precisely from today, was already a little bit chaotic. There was a little bit of frenzy surrounding it because of COVID, because of the postal voting. What happens now? How involved does Vice President Pence become? So, yeah, lots of uncertainty, but certainly it has affected the markets because, you know, like him or loathe him, Donald Trump is the head of state of the world's most powerful and wealthiest economy. So it does have implications for everybody concerned. But yes, the markets are in a frenzy in the UK. Lots of people running to the safe haven gold actually at the moment. Gold is up about 0.5%.
And in another development, how are Londoners chewing the core by the members of parliament to legalise e-scooters in the UK and, of course, advertise them to car drivers as a greener alternative for short journeys. How safe will this be on the road?
Oh, we're not sure how safe. I suppose that's what the committee will be speaking about. I was actually surprised that it wasn't legalised because I'm sure most people in London have been seeing these e-scooters around. You know, you turn around, there's one whizzing past you. It's already pretty popular across the European continent. I believe it's legal in Germany. It would potentially help to cut emissions across London, which is one of the main concerns for Boris Johnson's government, as well as the London Mayor, Sadiq Khan. I believe what they will try to ascertain is just exactly how the cycling lanes, which also occupy motorcyclists, would be able to accommodate these new e-scooters. But they're already really popular. They are fast. I believe they go between 9 to 15 miles per hour. So safety will be the top priority when they make this final legislation.
And Marks & Spencer has started selling an independent eco-fashion brand on its website. How will this help to boost the retailer?
Well, not certain, but hopefully it will give Marks & Spencer's a little bit of a boost. They've been struggling. They were struggling already before the pandemic when they were relegated from the FTSE 100 to the FTSE 250 for 8 years in a row. Their sales have been down. They have never stocked another brand. They always have the Marks & Spencer's own brands within their store. So they've got this Nobody's Child label, which is billing itself as an antidote to the damaging fast fashion industry. It's a 5-year-old London company, and they sell eco-friendly clothes. So I presume M&S have put this on their shelves to try and attract perhaps a younger, more eco-friendly customer. But only time will tell whether or not this helps with their revenue.
All right, we'll continue to track those market numbers and see what they look like, perhaps at the end of the day. But get an update from you at intraday. Thank you.
Thank you.
Well, back here we have Temple to, of course, give us a review of what the market was like on Wednesday before the holiday. Is the first trading day for the new month.
Of course, and we do expect the bullish sentiment we've been seeing in recent time to go on. So quickly, we're up on Wednesday, 0.85%. This trims our year-to-date negative performance to 0.02%. And that's something that I can assure you that we will actually cross this period and, of course, take us back into the positive territory. Because if you look at the month-to-date performance, that has improved to 5.9% in the market. Volume on Wednesday was negative. Value was also negative by 11%. And of course, the banking stocks continue to do so well. A lot of them were up by some 5% to Jais Bank, 4% plus to other major banks that you have. The consumer goods side of the market, given what we've been seeing lately in the Nigerian brewery space, there was a bit of profit taking on Wednesday in the market. And so that's contributed more to what we've seen here. Dangote continues to jump, was up by more than 2.81% on Wednesday, and that shot up the price as well. Then insurance, WAPIC, and of course oil and gas, you got some activities at this point in time. Total, which was at 36 naira, is now 96 naira. And of course, Eternal Oil has also jumped. Look at the NASDOTC, which was negative, 0.26%. Of course, but it's a bit of a profit taking because, again, if you look at the volume and value of transaction, that's where Friesland Campina Wamco enjoyed some participation. Some 4.96 million naira worth of transactions are held here. Accounting for this value actually came from Wamco, given the acquisition of Nutrisima and some other products that they've acquired from PZ PLC. Bonds market was negative on Wednesday. And of course, for the NCB, we got 1 billion naira worth of transaction on Wednesday. I kept on saying Friday, but it's Wednesday actually, midweek performance. Because again, we saw a decline in the yield of transaction, in the yields by 2 basis points from 1.87 to 1.85. And of course, 30th of March 2021 paper got a bit of 43% decline in the yield. And that was the best performer with some 10 billion naira worth of transactions on that. Bankole Odusonya from UBA, fixed income dealer over there, and of course the head at that unit, joins us now. Hey Bankole, what can you tell us about this significance of the independence anniversary for the debt market?
Oh, yeah, thank you very much. In a nutshell, about the mobile, we have also seen the mobile and power subsidy prices. The fiscal reforms, if I'm going to use one word, fiscal reforms that will help the government spend its funds more diligently in improving on our deficit on infrastructure. We have heard a lot of speakers speak about rail, housing, roads construction, and all that. So basically, the government is trying to reduce its cost of debt service, even as they are trying to spend money on infrastructure and rather than subsidies that benefit a few. One other thing that has come up temple is that the proposed budget for 2021 has been put forward with a deficit of 4.5 trillion. Of course, that's going to have bearing on our market, our debt market, on how much are they likely to borrow, locally or internationally. Are they going to do bilateral borrowings, euro bonds, or are they going to do treasury bills locally or bonds locally? Those are the impact of the fiscal movement and approach of this government that we'll be watching in the next few weeks and days to come.
Perhaps in a 10 seconds kind of response, Bankole, can you tell us where you'll be channeling all of those coupon payments and maturities that you have received this week to today before the week closes?
As a trader, we are still buying treasury bills. If you see the Wednesday results, you will see that there's still much demand for treasury bills as the sentiments are that yields will drop further. So you can buy at 2.8 and then sell at 2.5. It's still a profit for the traders. For the long-term investor holders, we are beginning to see diversification to equities and other sectors of the economy.
True.
Thank you.
I hope you join in that diversification, Bankole Odusonya, head of fixed income at United Bank for Africa. Thank you for your analysis. It's well appreciated. Chimezes, back to you.
I guess I'll consider that. Diversify.
Welcome on board.
But to where? Equities?
I don't know. Make your choice. Or cryptos.
All right, that's a wrap on the show for today. And of course, for the week, of course, is the first trading day for the new month after the Independence Day. Happy Independence again to Nigeria. I'm Chimeze Obi Iwago.